So you might be wondering, what do Imugene, Novonix, Liontown and Paladin all have in common? Well, in today's video, we're going to unpack this common thread, and we're talking about ASX Index Rebalances. You might have previously heard the phrase Index Rebalance, but you might be wondering, what does it mean? And then more importantly, what does it mean for the companies that you may be invested in or watching, whether they're rebalanced into or out of indexes, and what it actually means for the stories as this happens. It's a fascinating part of the market. It happens quarterly. It can be important and formative for the growth stories of many of the companies that we watch. So today we'll be unpacking the stories, and of course we'll have a look at each of these companies that were standouts of the past ASX 200 rebalance and discuss how they've been progressing over the past year. If you do enjoy this video, don't forget to hit the like button. Feel free to share it out. If you're new here, welcome. We make a daily video each and every day. So if you don't want to miss any of those, make sure you've subscribed and turn your bell notifications on as well so you don't miss any of the updates. So that brings us to index inclusion. I'm sure you would have heard the phrase before, but you might actually be wondering, what does it mean? Let's take a step back initially and actually think about it from that first level, a market index. What is a market index? An index is just a portfolio of investment holdings that represents a segment of the financial market. There's a range of different indexes and they really cover a broad range of things, but they can be distilled down into two major pillars. Firstly, they're commonly constructed surrounding capitalization or size of indexes. You might be familiar with ones that are focused on capitalization, like the ASX 200, the flagship index for the ASX, or the S&P 500, centered around the 500 largest companies in the United States. Or they can also be centered around sector specialization as well. So we've got ATEC or the All Tech Index. There's also the NASDAQ 100, which you might be familiar with over in the US. But essentially, the indexes provide representation. And now that the index investing continues to grow in importance, the opportunity for individual investors to potentially invest into sectors as well and get exposure to different trends or to different types of areas of the market. We've got here on the left a few of the major indexes that you might be familiar with or have come across on the day-to-day, from the Dow 30, which is a blue chip index, S&P 500, stocks and FTSE, the FTSE, they're European-based ones, or the MSCI, which covers the all world as well. We'd love to know your thoughts on it all, so drop in a comment below what you thought about the recent index rebalance, how you've been looking at the range of companies that have come into and out of the index, and your general thoughts about the state of the market at this current stage. And so you might be wondering, okay, there's a range of different indexes, the ASX 200, S&P 500, these are common names, we hear them often. Why is it a big deal when companies are included or excluded from indexes? So index rebalances happen regularly. For many of the ASX indexes, they happen on a quarterly basis at the end of each quarter. And index inclusion matters because essentially at its core, it can lead to an increased demand for shares, both on a fundamental as well as on a sentiment-driven level for companies that are included. And of course, the reverse can happen for companies that may be removed from these indexes. If we think about it at a very basic level, share prices are simply a function of supply and demand for the available shares. Economics 101, if supply stays constant, but demand increases, then often that can lead to an increase in price, as we know. But why does index inclusion matter? So this is happening quarterly, but there's actually a few different factors that can contribute to it. Firstly, if companies are included into indexes, then of course after the rebalances, then funds and ETFs or different types of funds that provide exposure to the underlying indexes, they have to purchase these shares so that they can provide the correct exposure with the correct weighting to include these companies and provide that exposure for their clients. On the other side as well, there's actually mandates. So certain funds can only purchase from certain indexes. So if companies are included particularly into flagship indexes like the ASX 200 or the S&P 500, well, these funds may now have the opportunity to actually purchase into these companies where previously maybe their mandates did not allow them. So there's exposure on that level. But then I think additionally on top of those fundamental reasons too, we know that sentiment has the ability to impact investors' perception and decisions on the market. Investors can often look to indexes for ideas and validation. They might be interested in what are the top 200 companies on the ASX. They look to the ASX 200. Or what are some of the top technology names on the ASX? And they look to the All Tech Index. They might be looking for some of the top technology names in the US and they look to the NASDAQ. So this can bring them ideas and validation, and getting onto the list can be a critical transformative event for many of these companies. And along with that as well, brokers and research houses will look to do research on the largest companies on the market because of course they will have the most exposure and the most eyes on them. Getting inclusion onto these lists can also lead to that further validation and awareness as well at the research level. And so that then leads us to the recent ASX 200 rebalance. As mentioned, at the end of the year, at the end of the December quarter, like each and every quarter, there is a rebalance. Some companies are included, some are excluded. The The reason why the ASX 200 rebalance is viewed with even more significance in comparison to some of the other indexes that the ASX has, like the 20, the 50, 100 and 200, which are all run by Standard & Poor's, the 200 is considered the flagship index, and often it's viewed as a representation of the broader Australian equity market. If you ever see on the news, maybe you might be watching it and they say, oh, the stock market is up today, or maybe you're talking to your mate at work and he's like, oh, the market is down today. Often investors and researchers and analysts will look at the ASX 200 as that flagship index to give them their insight into how the broader market is tracking. So of course, all of the eyes on the ASX 200 mean that there's a significant amount of awareness for companies that can achieve that inclusion into it. So the recent ASX 200 inclusion announcement was after trading on December the 3rd, with companies to be included at the start of trading on December the 20th. So really upcoming on this initial Monday session. You would have seen some interesting volumes at the back end of the Friday session, which is the final session before these funds and companies had to have these companies included if they did want that exposure to the new inclusions. And so there was a lot of interesting volumes that were coming in for companies like Imugene or Novonix or Liontown. Just to give you an insight into how large these flagship indexes are, the ASX 200 makes up around about 80% of the total Australian market, and the S&P 500, of course led by the mega cap technology names who continue to grow in size and scale, makes up over 80%, up to 85% of the United States market. So these are leading companies, and even though they're small in terms of an absolute number compared to the 2,000 plus companies, for example, that are listed on the ASX, on a capitalization scale, they make up the vast majority of this. So of course, they have a fundamental role to play. Before we do dive into a couple of companies that were recently included into the ASX 200 rebalance, reminder, I'm not a financial advisor. Nothing we discuss on the channel is financial advice. Stocks we cover are not buy recommendations. This video is all just here as a general discussion to be that starting spot for you to do your own research from. And so stock number one, Novonix. ASX NVX has had a breakout past year. We all know about the increased attention on the broader EV battery material supply chain, and Novonix really serves a key role in the American value chain. They've got a range of operations in both Canada as well as the United States, and it all centers around their battery technology solutions business, where their focus is on really improving both better performance, longer life, and lower costs for batteries going into the electric vehicle space. They also do have their Amira side for the energy storage systems too. But really, their battery technology solutions business gives them that opportunity to get visibility across the broader value chain, to provide the opportunity to actually improve qualities of batteries and make relationships with a range of different companies as well across the value chain. And they're playing a key component within this. Not only do they have their battery technology solutions business, where they have a lot of their technology development, prototyping, they do testing for a range of companies out there. You might be familiar with it if you've got any companies in the early stages or upstream aspect of the EV battery mineral supply chain. But they're also developing out their pure graphite anode battery materials supply business. They're currently the only qualified US-based supplier of synthetic graphite anode material. We've talked previously about how important graphite anode is as a component of the lithium-ion batteries, and they've got commercial agreements in place with some big global players like Samsung and Sanyo. Also, additionally, recently, Phillips 66 made a 16% strategic investment. Of course, this is major because they're a big global player, but it also gives them the exposure and the opportunity to get their hands on a key feedstock into synthetic graphite, which is going to hold them in good stead moving forward. As we discuss these companies, I'm keen to hear your thoughts on them all, so drop in the comment below if you're interested in any of these companies or how you've been perceiving the recent index rebalance. Stock number 2, ASX PDN or Paladin. Paladin was truly one of the ASX uranium darlings from the last bull run at the start of this century. They were founded by John Borshoff, who is a real leader and entrepreneur in the uranium space, and they have their centered operations around their flagship Langer Heinrich mine, which is in Namibia. They do have a range of different exploration targets as well as operations in different countries, which you can see here on the right. But really, it's all centered around their flagship Langer Heinrich mine, which is currently in care and maintenance. But we do know that as the uranium price pushes higher, we all know about spots buying as well as the potential demand drivers coming online over this next period and the undersupply, because so many mines have not had that incentive with a high enough uranium price to be producing. That over time, it's going to be interesting that if Paladin do have that restart, how they really do continue to grow, particularly with the excitement surrounding the opportunity that in next uranium bull run could present, as there's this focus on decarbonisation and this transition away from the old fossil fuels to more sustainable, cleaner forms of energy. We know that $60 is perceived as that magic number, $60 US per pound. It's trading in and around that $40 to $50 mark at the moment. So it'll be fascinating to see how the PDN as well as the broader uranium sector story plays out over this next period. Liontown Resources, ASX LTR. They've been one of the true beneficiaries of the tailwinds behind the EV battery space, as well as the lithium sector that's going to be feeding into the broader EV adoption. They have the flagship Kathleen Valley resource, which is a significant tier 1 lithium resource. It's a huge resource, 150 million tonnes, and it's of high grade as well at 1.4%. They also do have their Baldania resource as well, but a lot of the discussion and the focus at the moment for ASX LTR is on Kathleen Valley, which they're looking to bring into production over the next few years. They do have a downstream processing scoping study at the moment underway to try and capture more of the value chain as well, which we've seen a range of different companies do across both Australia and globally. And they do have offtake optionality too. We know about the elevated lithium prices that have continued rising over this time. Liontown do have that opportunity to look into potential offtakes over this next period. They have recently completed a $450 million institutional capital raise in the process of an SPP as well, hoping to really fund this next stage of development as well as some exploration and some further thoughts about expansion upcoming too into 2022. And then ASX IMU. Imugene is a clinical stage immuno-oncology company that really are focused on developing a range of treatments that activate the immune system. As you can see here, they've got a very busy pipeline with plenty going on across the board, from their B-cell immunotherapies with their flagship HER-Vax as well as PD-1-Vax. They've got their CF33, their oncolytic virus, and their most recent addition, which has got a huge amount of excitement surrounding it for Imugene, onCARlytics. They've got recently approved FDA IND approval, which is significant for trials surrounding both their Vaccinia, which is their CF33 oncolytic virus, and another phase 2 trial for HER-Vax. And over the past couple of months, they've signed a clinical trial supply agreement with Merck Germany and Pfizer, so two of the leading names in the big pharma space. We have recently interviewed Leslie Chong, the CEO of Imugene. If you are interested in learning more about that story, we'll leave a link to that video after this one that you can check out. And so I guess bringing it back to that question, ASX 200 inclusion, index rebalances, what does it all mean? Firstly, if you did enjoy this video, don't forget to hit the like button. Feel free to share it out. If you're new here, welcome. We make daily videos, so make sure you've subscribed and you've got your bell notifications on so you won't miss any of those. As you can see here, 5 in, 5 out. The fifth one that was added in addition to the 4 that we've already discussed today, was Event, Hospitality and Entertainment, ASX EVT. And 5 that were removed, quite interestingly, there were a couple that were actually some of the big beneficiaries of 2020, and it shows a bit of a transition in focus from the market, from those stay-at-home stocks in 2020. There were real beneficiaries like Kogan and ASX RBL, and then we've seen this trend over the past year with this ESG focus, this focus on decarbonisation and a move to a more sustainable and green, clean energy society. You can see that playing out with companies like Liontown, Novonix and Paladin Energy. It's going to be interesting to see what happens over this next period, over the next week, as of course the inclusions become official, but really over the next 3, 6, 12 months, as some of these companies that have been included get onto some more funds radars. Investors might start looking at more of these companies further moving forward. So it's going to be interesting to see how these additions into the ASX 200 Index go trading into 2022. Keen to know your thoughts on it all, so drop in a comment. It's always interesting with index rebalance time to see how the companies are affected and to see the different types of companies that are included and, of course, unfortunately removed too. A big congratulations to the teams that have had the inclusions into the ASX 200 flagship index. It, of course, is always a milestone achievement for these companies because it really is a massive opportunity to be included into the 200 largest names on the Australian equity markets that are publicly listed. Thank you so much for joining us. Hope you enjoyed this video. It's going to be an interesting run into the back end of 2021, and 2022 is nearly upon us. Thanks for joining us, and for now, stay well and happy investing.